Good afternoon, everyone. I'm Sai Nair on behalf of Kirin Advisors. It's a pleasure to welcome you all to Beyond the Numbers Value Discovery Summit 2025, powered by Value Educator and co-powered by Kirin Advisors. Today marks the final day of our three-day summit, featuring a powerful lineup of focused management meetings to conclude the journey on a high note. This is the ninth interaction of the day, and we are pleased to host HVAX Technologies Limited. From the management team, we have Mr. Siddharth Patel, the Chief Financial Officer. From Value Educator team, we have ourselves with Mr. Pranit. So, with that, now I would like to hand over the floor to Pranit, sir. Over to you, sir.
Thank you so much. Good afternoon, everyone, and thank you for joining us today. Before we begin, a quick introduction. Established in 2010, HVAX Technologies Limited is a turnkey solution provider focused on clean room and controlled environment infrastructure for regulated sector such as pharmaceuticals, biotechnology, healthcare, and FMCG. The company's work spans design, engineering, supply, installation, testing, and commissioning of complete clean room systems. Its capabilities include clean room HVAC systems, modular partitions, air handling units, ducting, ceilings, doors, and building management systems. HVACs also offer feasibility studies, detailed engineering, and project integration services. The company began international operation in 2012 with with its first projection in Kenya and has since executed complex hospital infrastructure assignment, including for Nairobi West Hospital. With this, I conclude the company overview. I now hand over the stage to Mr. Siddharth. Thank you, sir. Over to you.
Thanks, everyone. Thanks, Pranit, for your quick introduction. Hi, everyone. This is Siddharth Patel. I work as in capacity of CFO at HVAX Technologies Limited. Just to give you a quick touch upon again, we are turnkey pharma clean room aggregators. We do end-to-end designing, engineering, and consulting services for our pharma clients. Currently, our major focus or major revenue streams are from pharma vertical. We help and we design clean room panels, walls, doors, covings, riser panels, pass boxes, electric panels, chillers, AHUs, just to give an idea about our product services. We recently closed our H1 on a very positive note. We grew by 35% year on year over last H1, and our gross margins were at 39%, while EBITDA was at 13.58% and PAT at 7.84%. So we believe we are in that space and that growth stage where we'll continue to grow in a double-digit number. As a guidance, we believe will be something about 35% growth over year on year over last entire financial year. And that's what we are focusing on. We just recently are in a process of negotiating and discussing an M&A opportunity. We believe we should be able to close or evaluate and close and pick any firm position by March 2026. Yeah, that's it. That's the high level update from my end. I'm open to receive any questions and answer whatever I best possible I can.
Okay, so participants, the floor is now open for Q&A session. If you have any questions, kindly raise your hand. I'll allow you to unmute and you can ask the questions. You can also write down your questions in the chat box. Yeah, Mr. Ayush, you can go ahead and ask your question.
Yes, sir. Good evening. Hope I'm audible.
Yes,
Okay.
you are audible.
So, I wanted to ask you, what does our working capital cycle look like today? So, what are our receivable days? What is our payable days? And what is the average inventory days that we are having?
Got it, got it. See, I can tell you about H1 basically. So we have DSO days of 163 days, which was a little bit closer to 200 days in March 2025. So we have improved there. In terms of our DPO days, we are about 45 as against about 70, 75 in March. While those have improved and our constant, push is on operational excellence to ensure that we ensure our delivery dispatches are on a shorter cycle, and we make the collections very faster. While having said that, while those have improved over H1, but historically, if you see our businesses, which is have been a little bit lumpy, that means we clock significant revenues in our H2. So we believe while we close our books at the March, we believe the improvement would be there, and we tend to be, a very cautious company where we focus more on our collections and focus more on our payables. So we are on that growth trajectory basically, and our inventory turnover would be something thrice, 3 times for H1.
Right. Sir, coming to the receivables again. So, how much percent of the receivables as we stand today are less than 1 year old? How much percent are greater than 3 year old? Could you just enlighten me on that also?
Unfortunately, I don't have those numbers, ready-made available. I don't have segregated that way, but I can take this question offline and possibly try to respond to you on that as
Okay,
a
but do we
percentage.
have receivables in our books that are greater than 1.5 years old?
Not more than 1.5 years old, but of course, see, our nature of business is such. Certain amount is been withheld by a customer as a retention. So the way it goes, our projects are this way. Once we do the delivery and dispatch, we go and install that. Once installation is done, certain customers may retain about 5% or 10%, depending upon the contract, which they would release that money in a certain customers do in a 6 months time, certain in 9 months, certain 12 months, depending upon how the contracts are. So yes, to answer the question, the answer is yes. But that's how the nature of our business are. Those are not to further color or clarify. They are not bad debts, or they are not something which we will not recover. They are just nature of our business. That's it. Unlike possibly other firms where you don't see how other sectors where there is no retention. We do have retention.
Okay, and so when it comes to our related party concern, our sister concern,
Hmm.
so if I'm not wrong, we are purchasing 20 to 23% from our related
20%.
party concern.
Yes.
So, can that number go up a significant amount in the near future, or that will be the number where it stands?
So last fiscal year we did about 20%, 20 or 21%, or I don't remember, but 20 or 22% our purchases were from sister concern. So while we speak today, see, it all depends upon what sort of projects we are winning. But this year it has been significantly lower. I don't, from a directional perspective, I don't think so. It can go as a percentage beyond this, because our nature of offerings are such wider that the supplies from sister concerns are just a one part of the entire offering what we give. So again, to respond from a directional perspective, the numbers can at best be the same what was last financial year, or it can drop, but not go up significantly or any that way.
Right. So one final question, sir, from my side, when it comes to companies like FabTech, what is the differentiation we have with them, or are they not a competitor to us at all?
So I would like to, say to respond to the question the other way around. So yes, it's a peer comparison to an extent. We do operate in the similar sector. They are also clean room, participants, and we are also clean room participants. Well, having said that, to put my segregation or compare with the company, I would like to refrain from that. While we believe it's my sorry, I'm not saying I'm not making a comparative statement. While we believe our depth of services are far more higher, our customer retentions is far more higher than any not an individual comparative company, but we believe uh, we want to be more client centric and have more offerings to our customer as against possibly other players in the segment or in the market.
Right. So last two questions, sir, from my side. So what is the top line target that we are taking for the next 2 years, say FY 27, FY 28?
So that's a little bit of long shot. While directionally, I can only comment on 26. While we are yet to you know come with a firm strategy or business plan for anything beyond 27 or 28. But this year, we believe directionally we should be about 35%, and we are on track for that. We have the order book to that level as well. This year we should be able to do that, and the momentum should continue. While I don't have a number to cite over here, but directionally we are also doing exploring an M&A that should also boost up in next financial year. How much is something possibly maybe we'll have some time, then we can come back.
Okay, and sir, just one final question from my side. Do you believe that the remuneration and the number of employees are going to increase over the next 1 year, specifically the remunerations?
Of course, yes. We are still on a hiring spree, so we keep adding our teams as we need, as we are growing, and to come up with the dispatches. Having said that, we have been 13%, 12.5% to 13% of our top line. While directionally, it would not go that linear. That means it will not always be 13%. As we grow, as we do more, it will, as a percentage, it will not be linear.
Yes, only I asked this because the top management salary is 17% of the operating profit. So that is the reason I asked the question. But anyway, sir, thank you. That was all from my side. Yes.
Sure, yeah.
Yes, Mr. Sridhar, you can go ahead and ask your questions.
I see you also the APCM company as in HVAC. My understanding is correct.
Sorry, if you can repeat your question, please.
Can we consider your company as a APCM for HVAC, engineering, procurement, and construction?
No, we are not a EPC. While not exactly an EPC, while we would term ourselves as a turnkey pharma clean room aggregator. So we don't do constructions at the outset. While we do design, we do aggregate, we do procure from various different suppliers, producers, and get the clean room set up for our customers.
So construction is by the customer party, or they contract somebody else to do the construction while installing at site. You will be supplying a clean room, but when it comes to the installation and customer side, the construction is done by somebody else. Is my understanding is right when based on your explanation?
Yes, we don't do civil, we don't do any construction. You are correct, but I'm not able to complete. Your voice is a bit cracking, but I can, if you can hear me out, we don't do civil construction. We are into designing and procurement for the pharma companies to set up their R&D labs and clean room setups.
Okay, but you'll be when you're supplying a material, who will set up in the customer side? Is it under your guidance, or just they can install on their own?
No. So we do installation. We do that.
Okay, so you'll be giving a service support.
Yes.
So it's on man-hour basis at the site, or it is part of your turnkey. Like customer delays. Your engineer or somebody goes there. If customer delays due to various reasons at a site, is it a billable service or is it a turnkey service?
So I don't know how to respond. So if I understand your question, at what stage you are suggesting the delays are? So if I can touch upon our process, once we win the project, then there are a lot of designing efforts which goes in where the customer needs to approve it. Sometimes you also need to have an approval from a government agency or that way. So that's a part of our typical cycle where some delays on time here and there. The time of designing is fairly factored in, and there's nothing as such. Once the designs are approved, it goes into procurement cycle, which is again a normal thing. And once it is shipped, then our installation team goes over there where customer has not much to. We just have to go and install that. There is nothing as such delays as such basically.
So as of now, you're not encountered any delays at a customer side. Just your team goes and they will complete the job at a scheduled week or 10 days, and it will be
Typically,
done.
yes, yeah. Typically, yes. There can be some 1 week, 2 week. I'm not saying exactly, but there can be some here and there, but they're not significant for that matter.
It is not. It is not
It's
considered
just a part of, yeah, it's just part of
part
that.
of it.
It has never happened
So
that
just
a particular project has been significantly delayed and which really it's an earth-shattering thing. That has never happened so far.
when I see your website, it clearly suggests it's a clean room as soon as I go over to the website. But when we see the services portion, it gives a various different options, like including products. When you go to go products, it says PEB also. So is it just you're trying to enter into PEBs also?
Sorry, if you can, repeat the question,
No.
please.
Your website clearly indicates you're more into the clean rooms in terms of HVACs. But when we see the product line of your website,
Okay.
apart from products, it says clean room, HVAC system, building, management system, pre-engineered building. It mentions a lot. PEB HVAC is entirely different from a clean room HVAC. So is it just you're trying to enter into new areas, or is just the website built?
So I don't have the answer for this. However, I've noted this question. I can come back to you with a specific answer on this.
Yeah, guys. Product line says a lot of things which are not. No, this is just a curious question. So that's it
So
from
this
my
can be
side.
a part. So this can be a part of offerings, right? So of course, I'm yet to specifically answer back. But here's what my directional answer is. When we pick up with the entire turnkey, which will involve a lot of things: panels, electricals, specialized machines, specialized compartments, isolators. A lot of specialized products we will pick up. We will get it done from somebody else, but we will be the smart mind behind that. That means what pressure should be there, how much it should be there, functionality kya hoga, that we do with it. So our offerings are significant compared to, we would like to do the entire range of delivery, and that's what I think the website says. However, having said that, I can come back to you with your specific question that is it a part of offerings or we do manufacturing? We don't do manufacturing on our own, by the way.
No, that's no. See, the rest of the product seems to be nearby, your product line. But when it comes to the PEB, it's entirely a different sizing and different PEB HVAC. It's entirely a different comes from a clean room and HVACs. So it got me curious. Thank you very much.
Okay. Yeah, I can come back to you on this.
Thank you.
with the-
Thank you.
Sir, you are on mute.
Once again, participants, if you have any questions, kindly raise your hand. I'll allow you to unmute and you can ask the questions. You can also write down your questions in the chat box. Yes, Mr. Morley, you can go ahead and ask your questions.
Yeah, thank you, Siddharth Patel, for elaborating about the products and the services. So again, somewhat, my question is similar to the previous person who's asking, but it is little different. I'll give you more, better clarity and ask. It's like, just you mentioned that you do the design, evaluation, and then sourcing the parts and materials, and then you do the complete setup of that installation part also for especially the pharma things, right? And are you also going for the semiconductor area, or it's not touching?
So
Nowadays, like, the semiconductors and data centers are becoming a boom and high value creation areas, right? Are you going there,
correct.
or are you already there?
Yeah. So we are already starting evaluating a lot of proposals. It's a new niche area for us. From an operational perspective, we need to understand, what we can deliver, what should be our quality. So yes, we are in talks in that phase, in that sector for a few of our customers. and we have done one for solar customer where one of the pilot project is going on. And once we get a big, once we are confident and we are sure about that, then I think we'll have a full-fledged team and focus on that. Directionally, the answer is yes. We want to have that revenue streams coming from those two sectors.
Okay. And the next question would be under services, you mentioned the engineering consultancy, gap analysis, and then few other things. Even technology transfer kind of also you mentioned. So that means these services individually also you can offer to somebody, who want to execute the clean room systems, right? Or you do everything yourself?
No, I didn't get your question, sorry.
Under the services, you mentioned many
That I
categories.
understood, but what's the flavor of a question? So let's say I can do technologies transfer. Yes, I can do that. So, but what's the question is what I was not able to
The question
understand.
is simple, like, maybe someone want to execute, okay, and he doesn't
Okay.
want to take care of the design part
Okay.
and even sourcing part.
Mm-hmm.
Okay, so will you do the design and sourcing, and he will do just the setup, installation?
I got a question now. Yeah. See, this is a sort of sector or this sort of space where it's like too many cooks spoil the soup, right? Not from a HVAX perspective, think from a customer perspective. Would you want one guy to do end-to-end or you want multiple people to come and do that, right? Now, so while your question is actually on HVAX, but I'll try to answer it from a customer perspective. Customers would like to have end-to-end with one guy. If I have a retention, if he wants, then of
No,
course,
that's fine. That's fine.
peace of
The
mind for him,
point
right?
was actually, the description on the website was a bit confusing, so I just wanted the clarity. That's
Yeah.
all. There's nothing wrong in that.
Maybe we can relook at that website.
Yeah.
But just I hope that I answered your question well.
No, it's clear. It's clear. Okay.
Okay. Yeah. Thanks.
The next question would be, there are, I think, over 300 clean room system, turnkey even project providers. I just want to understand, like, how are we pitching ourselves as the best guys in the market?
Mhm. Good. You see our history. This will be slightly subjective answer and may not be that objective. If you see our history, we have been actually, the way we started with the small 2-3 crore projects, with now actually ticket size going up to 30 crores as well, and certain projects with a big ticket size as well. So the confidence comes from customers and the use case which we do that. It's not that I'll say I can do this, I can do this, I can do that, right? The customers who evaluate us, they know where we have worked and what our capabilities are. That is the first part. That means they refer where other use cases are. And secondly, the market in which we operate, it's as of now, the African market and the Middle East market, they are very big booming markets. And it's not that somebody can, just start up and quickly jump into the gun. It's not that you need to have
No,
the
sorry to pause you. Sorry to pause you.
Yeah.
What I mean is, like, even there are guys, who have been serving this market for the last 50 years.
Mm-hmm.
Even if you compare with them, how can you say that, you are better than the 50 years, experienced guys in the market?
Yeah, I was responding to that only. See, let's say somebody with a 50 years experience or somebody like us, 10, 15 years in the space. So customers will have his own evaluation cycle. Some portion would go where, we have an edge, whether it's in terms of quick execution, which we believe is our strength. Our team who has a very shorter turnaround as against possibly other players over there. So that's where it matters a lot, where our designing team comes up with a lot of other options and flexibility what we provide. That eventually matters a lot. Otherwise, to put out 2 or 3 bullet points, what differentiates, that is a very subjective thing. I don't think so. At least anybody would be in a position to give that pointed answers for this question.
All right. Thanks.
Sir, we have some question here in the chat box. We'll address that first. So Miss Divya is asking, in domestic projects, you mentioned pricing pressure is more intense. How does HVAX differentiate itself against local competitors? Is it speed, design, capability, end-to-end execution, or price competitiveness?
So I'm not sure what we mentioned, but anyways, having said that, see, our revenue split is something about, so for H1, 14% is from domestic markets, and 86% comes from export, is our export revenues. Historically, it has been 17 domestic and 83 from export. So while we are selectively open for domestic projects, but our major focus has always been exports basically. Now, coming to the question, what exactly is, yes, we do pitch in for big ticket size projects where we can get, so we work for marquee clients like Sun Pharma, we work for Serum. We do that when we get good niche where the margins are lucrative or with best shoots on, because we don't want to divert our energy and resources to where the margins is a optional, it's lower, like, and our focus is that way only. Almost all times we focus most on export business.
Okay, thank you for answering that, sir. Mr. Rizwan, you can go ahead and ask your questions.
Hello, Siddharji.
Here is one.
How are you?
Yeah, I'm doing good. How about you?
All good, all good. Siddharji, one thing regarding the order book. If I remember well, we were at some 300 plus crores of order book uh, s- uh, in the Q1, and there was certain uh, bit uh, in the range of 700, 800 crores as well. So how this order book looks now, and how we are, what is our winning rate on the bid project? So is there any update, anything you can share on that as well?
Sure. Hopefully, we should be able to share the updated order book possibly in some time. So RC winning strike rate is something about 25%. And I think our pipeline is something about 600 crores a month and month and a half back. And our order book is something about 350 crores. So that's where we stand. And of course, now we are exploring, the pharma side is one of it. Apart from that, with crew, we are trying to do joint marketing, and we are trying to pitch in the new projects in hospitals and laboratory as well. So once we have that, significant ticket size, I think we can see a good uptick in order book as well,
Okay.
coming in
So
from the other verticals as well.
other vertical. So one more question. I keep on seeing your exhibitions. Your team attends exhibitions in different regions, locally and internationally as well. What is the run rate or ROI? Do you follow an ROI on investing after these exhibitions, or the customer say acquisition? How this happens?
Mhm.
If you can explain something more on this.
So yes, that has been our USP, and not even recently, even historically, and that's how we have set our foots across the exhibitions do help this one. They in a big time they help us. They help us to get our brand, establish our brand actually in terms of lot of customers. So pharma customers, pharma users, they visit these kind of exhibitions. They evaluate teams where they see a lot of teams across a company coming together. They get to know them. And a lot of time, what happens, we get a lot of follow-up questions or follow-up RFPs, and we get a lot of. That's how we have been, able to hunt. So our business is mostly about hunting, right? Because these are turnkey projects. Once you do these projects, 6 months to 1.5 years, then the cycle is over, right? You have to go and find a new one. So this helps us in a very big way. And this year we have done a good investments in Germany, in Noida, a lot of other places where we have set up our booths, and that builds up a lot of inbound conversations happen that way, and they evaluate us. That's why they evaluate us, what are our capabilities. They are sort of questions: can you do this for us? Can you build up So a lot of times they come up with specified or bespoke sort of plans or capabilities. There we are able to respond to them. Yes, we have done this over here, we have done this. Otherwise, it gets difficult, for someone to evaluate players like us. It gives a lot of mileage.
Okay, understood. Another thing is on the acquisition, the recent announcement you did. So, what's the update there? It was a very small acquisition,
Mhm.
and how this will help going forward as a business to have access here.
Sure.
Is this
So we have
only
received a
the?
term.
Yeah,
Mhm.
just my question is
Sure,
like,
sure,
is
yeah, go
this?
ahead, yeah, please.
Yeah, is this related to human resources to get the human resources on hand and utilize in the business? Because during the con calls, similar to, as somebody already said that for FabTech, one of the listed players, they were raising that there is some challenges in the human resources in this industry. So is this related to that? Do you have the same challenge, or what was the thought process behind this acquisition?
Sure, sure. Let me respond to that. So just to give an update on the acquisition front so far. So we have received the term sheet and we're evaluating the term sheet. While we're doing that, directionally we believe whether to close the deal, we should be able to do by March, which is like signing a firm agreement, making transfers, whatever is required. So that we are targeting by March or somewhere here and there, maybe Feb or maybe April or whatever that happens. So that's the deal part of it. Now, why is this so exciting and how this helps us? The ticket size is, of course, a smaller size in terms of their number, basically. But how this helps us? It helps us in a very big way. So, what they manufacture, what they produce, as on date, crew, they are only domestic players, and that kind, those sort of products and requirements, our customers do have it. As on date, till so far, we never used to, be a part of that. So that was not a part of our offering so far. So the offerings from Crew broadens the horizon of my offering to my existing customers and the newer customers where we are pitching in. So for me, it's a very win-win situation. My offerings goes up, so my ticket size goes up, and so my margin. So we believe we should be able to do a margin expansion. We should be able to. This will give me a competitive edge because these are very niche products. And a lot of time customers make a lot of technical changes so that which suits their requirements. That capability Crew has it. So that's what is going to happen. That's a very low hanging fruit. That is one aspect of it. Second aspect is whatever space they are working on, we can go and pitch our services to them as well. So hopefully we should be having some not that significant as a percentage may not change, but we can win some domestic projects as well. And while their supplies to our external or export customers will be like margin accretion to us. So that's how we see it as. Very simply to put, their products are easily sellable to our existing customers.
Okay. If I can ask one more question
Sure,
regarding
sir.
the previous question somebody asked for the retention. If we can get clarity, how much is the retention values from the past and how this is recovered, what's the time frame, and how it will affect our cash flow going forward in the coming quarters?
Got it. I can respond back. I have taken this question and I'll circle back on this.
Great, great. Thank you so much.
Yeah.
Yeah, once again, participants, if you have any questions, kindly raise your hand. I'll allow you to unmute and you can ask the questions. You can also write down your questions in the chat box. Sir, Ms. Rasika is asking about the current order book in the chat box.
So our last published was 312 crores with a roughly additional pipeline of 600 crores. Will very soon publish the updated numbers. while those were just month and a half back, these numbers.
Okay. So someone's asking your order book stands at rupees 350 crore with strong
Yes.
conversion from pipeline. Can you share which specific markets or geographies are driving the highest conversion, and what gives you confidence that this pipeline will convert consistently at 20 to 25%?
So yes, that's have been historical numbers, 25%, the conversion rate. 350 was the last number which we said, and I think this has gone up. But I'll share you the updated numbers one. All these are mostly Africa and Latin and Middle East. Sorry, my bad. Africa and Middle East, which will have a significant portion of it, and some portion would be about, I think, it's a helpful number. 5% would be something about the pipeline would be from India, basically. And that's how our trend has been between 20 to 25%, and we have been conversion ratio.
Okay, thank you for answering that, sir. Sir, I think due to time constraints, we need to conclude the meeting here. So, can we conclude the meeting, sir?
Yeah, should be. We have taken up these questions. Hopefully, we will circle back.
Yeah.
Sure.
So thank you, Siddharth sir. Thank you all the participants who took their valuable time to attend this meeting. Further, if you have any more queries, feel free to reach out to us at corporateaccess@kirinadvisors.com. Thank you.
Thanks, everyone.
Thank you so much.
Thanks.